So in this class, we are attempting ICAN Foundation question for May 2019, question 3. As well, get my textbook or study pack. Okay, it's 7,000 naira per copy or $12 US. You can sponsor copies or gift people for 6,500 naira or 11.5 US. So let's quickly take the question. ICAN Foundation May 2019 question 3. We have in relation to IAS 16 on property, plant and equipment, define the following terms: depreciation, depreciable amount, useful life and residual value. Then B, on the 1st January 2014, a company acquired an item of equipment at the cost of 650,000. The item's useful life is expected to be 5 years with a residual value of 13,000. Calculate depreciation charges for each of the 5 years of the item's useful life using the straight line method and the diminishing balance method at the rate of 54%. So basically, this is a question on depreciation. So you can visit jadosconsulting.com to take the class that covers depreciation. So we had quite a number of methods there that we use, but in the question here we are asked to use straight line method and the diminishing balance method. So let's quickly attempt the question. The first one there says, in relation to IAS 16 on property, plant and equipment, define the following terms. So I'll just briefly explain and then you can take your notes so we don't waste time. So IAS there represents so let's say this is A, okay? So we have IAS 16, that's property, plants, and equipment. So IAS here represents International Accounting Standard 16. Okay, that's the standard or guideline that helps us to account for property, plants, and equipment. So the first question there says we should explain the term depreciation. I guess I've already defined that. I've explained that in the class proper. Okay, so go to jadosconsulting.com to get a full class on that. So for the sake of this examination, let's attempt it. So I'll explain and then you can take your notes. So basically, if you have an asset, let's say you have a motor vehicle, okay, that motor vehicle has a cost, okay, and then as you use the motor vehicle, okay, it is very possible, in fact it's factual, that the cost of the vehicle will reduce or fall over time. Okay, so we say the vehicle depreciates, or there is depreciation on the vehicle. Now, as a business organization, there are techniques or processes put in place to allocate, the part of the cost of an asset that expires, periodically to the financial statement in terms of income statement. Okay, so whatever technique or process put in place to allocate the expired part of the cost of an asset to a particular period over the useful life of the asset is what we call depreciation. Now the method or techniques put in place varies from organization to organization or from business to business, but this, however, must be in accordance with the recommendation of the International Accounting Standard. So what we have there is in number 16 that covers property, plants and equipment. So that is on depreciation. The next one there says we should also explain depreciable amount. Okay, so we have depreciable amount. Okay, so what we're saying here is that as an asset, there's the cost of the asset that is expected to be gradually written off over its useful life, or that is expected to gradually expire over its useful life. Okay, so the amount that is expected, okay, according to the technical process of the organization to be written off or expected to expire over its useful life is what we call the depreciable amount. So what I'm saying is, if for instance the cost of an item is say 10,000, and then we expect that we're to use it for 5 years, if at the end of the 5th year we also expect that the vehicle or the item rather will be worth 1,000, it means that 9,000 is the depreciable amount over the useful life. So the next one there says useful life. Okay, so what is useful life? So I just explained that technically if you were paying attention to what I've been saying. So useful life there represents the number of years that the vehicle or the asset, okay, is expected to be used. So if the vehicle or the asset of the business is expected to be used for 5 years or for 4 years, for instance, so the 4 years they represent the useful life. If the business is adopting 5 years, then the 5 years there is the useful life. Then it's adopting 10 years, then the 10 years there is the useful life. So the number of years adopted by a business, okay, to use a particular asset, okay, is what we call the useful life. So the next one there says residual value. Okay, when you say residual value, we're saying remaining value. Okay, so if you're using a vehicle or an asset, okay, for 5 years or for 4 years, let's say 4 years for instance, so at the end of the 4th year, what value will the asset be carrying? So if for instance the asset is worth 10,000, and then at the end of the 5th year, if we're using it for 5 years, or at the end of the 4th year, if we're using it for 4 years, if the value of the asset is expected to be 1,000 naira, it means that the 1,000 naira is the residual value of the asset. You can as well refer to it as scrap value. So if you don't call it residual value, you can call it what? Scrap value. So that is for the first part of the question. So the next part here, which is B, okay, B is saying that on the 1st of January 2014, a company acquired an item of equipment at the cost of 650,000 naira. The item's useful life is expected to be 5 years with a residual value of 13,000. So let's break that down. We have item of equipment. So we can say equipment is costing how much? 650,000 naira. So they are saying that it's expected to have a useful life of 5 years. So we can say useful life will be 5 years, okay? And then we have what they call residual value, also called the scrap value. So residual value, okay, or scrap value, they said is 13,000 naira. So they're not saying that we should calculate the depreciation charges for each of the 5 years, okay, of the item, which is the equipment, using the straight line method and the diminishing balance method at the rate of 54%. So what do we do? So let us use, so we say B1 now, okay, using the what? Straight line method, okay? Already I gave you the various approaches if you go to the class on jadosconsulting.com, but let us take one approach. So we have what? The cost of the asset, okay, to be how much? 650,000 naira, okay? So that means yearly depreciation will be equal to what? What's the cost? 650,000 minus, this is the scrap value. That means at the end of the 5th year, we expect the value of the asset to be what? 13,000. So we say minus what? 650,000 minus what? 13,000. Okay? So this is going to give us the depreciable amount. All right, so what do we have? We have so you can use a calculator, there's nothing wrong with that. So let's use a calculator now. Okay, so we have 650,000 minus 13,000. So this is what we call 637,000. Okay, so yearly depreciation, we can say is what? 637,000 times what? 100 divided by what? 5. Or, excuse me, times what? 1 divided by what? 5. So that will be equal to 637,000 divided by what? 5. Okay, so what do you have there? What do you have there? So we have 637,000 divided by what? 5. So that means yearly depreciation is equal to what? 127,400. So we can simply interpret, okay, the approach to be what? Cost, excuse me, cost, okay, minus what? Scrap value over what? Estimated what? Useful life. So what's the cost? Cost is 650,000. What's the scrap value? Scrap value is what? 13,000. So what's the useful life? 5 years. So 650,000 minus 13,000 divided by what? 5. That will give us 127,400. So that means that from 2014, we have 2015, 2016, 2017, and 2018. 1, 2, 3, 4, 5. So depreciation charge is what? 127,400. Okay, so that is it. So another way that we can do this, we can just say, or, okay, 5 years. When you say 5 years, are you there? 5 years, okay, so we can say 100 divided by what? 5. That will give us 20. Convert it to percentage, that's 20%. Okay, so 20% of what? The cost. Okay, 0.2 times what? What's the cost? Cost there is what? 650,000 minus 13 what? 1,000. So that will be 0.2 times what? 637,000. So what do we have there? 0.2 times 637,000. That will still give us 127,400 naira. So that is simply for the straight line method. But the next one here, they are saying that we should calculate the depreciation charges using, okay, we can do it here, which is, let's call this one B2. So we're saying using the reducing balance what method, or what we call the diminishing balance what method. Okay, so there are 5 years basically. Okay, so we can say let's say this is the year. Okay, so this is the year, so we can call this the cost of the asset. Okay, this is the cost of the what? Asset. So this would be the what? Depreciation. So we can call this net book value. Now understand that the cost here can also represent the carrying amount. Here can also represent what? The carrying amount. When we say carrying amount, talking about what? The value that the asset is carrying as at a particular what period of what time. So the first year there, which is 2014, okay, the cost is what? 650,000. Okay, so what's the depreciation? The question said we should use 54%. Okay, so we say what? 0.54 times what? 650,000. So what would that give to us? 0.54. Okay, 0.54 times 650,000. So this would give us 351,000. Okay, that's depreciation. So if you take this from this, okay, that will be 650,000 minus 351. That will be 200 and what? 99,000. So that means that in 2015, this is the cost at the end of the year. This becomes the cost at the beginning of 2015. In 2014, started with 650. Take out depreciation, you have 299,000. This is the cost at the end of 2014. Becomes the cost at the beginning of 2015. That will be 299,000. Okay? So now they already give us what? The depreciation rate will be what? 54%. So here it will be what? So let's just close this way. Here it will be what? 0.54 times what? 299,000. So what do we have? So we have 299,000 multiplied by 0.54. So that's here to be 161,460. So if you take that out, say 299 minus 161,460, you have 137,540. So this is what? The cost at the beginning of 2015. This is the cost at the end of 2015, also called carrying amount. Okay, so we have 2016. This becomes the cost at the beginning. Okay, 137,540. So what's the depreciation now? That will be equal to what? 0.54 times 137,540. Okay, so what do we have? We have 0.54 times 137,540. So I'm having 74,271.6. 74,271.6. Okay, and then if you excuse me, please. Excuse me. That's the depreciation charges, 74,271.6. So if we now say, what do we say there? We say 137,540, okay, minus 74,271.6. That will now give us 63,268.4. That's 2016. So 2017. The carrying amount or the cost at the beginning of 2017 will not be the carrying amount of cost at the end of 2016, which is what? 63,268.4. So depreciation now will be 0.54 times 63,268.4. So what do we have there? 63,268.4 times 0.54. So that we have 34,164.9. So we have 34,164.9. So minus, okay, we'll say what? 63,268 minus 34,164.9. Okay, So what do I have? 29,103.46. So 2018, that will come here, 29,103.46. So division will now be what? 0.54 times what? 0.54 times 29,103.46. Okay? So what do we have there? So we'll say 0.54 times 29,103, okay, 0.46. What do I have? I have 15,715.87. So depreciation, I minus this from this, okay, minus what? 29,103.46. I have what? 13,387.59. So this is the scrap value at the end of the 5th year. We have 1, 2, 3, 4, 5. Okay, remember the scrap value is 13,000. So this is about what it is. Okay, looking at significant value of an item. But then this is simply calculating what the depreciable charge or the depreciation charges of the item for a particular period. Okay, so here we've calculated for what? For 5 years, basically using the straight line method and then using the reducing balance method to calculate the depreciation charges. So this is simply, a technique or a method used, okay, in calculating depreciation charges, okay, for organizations, okay, and we have used straight line method and reducing balance method here. So you can as well get my textbook, okay, or reach me on the number displayed on your screen to place orders, or pay into the account displayed on your screen. If you have questions, okay, you can as well ask questions. I'll be benevolent by supporting the course. Thank you.